Hey everybody, how is it going? This is Billy. I'll take the radio voice off. So I hope everyone's doing well. I thought I would check in with you actually, because as most of you know, I like to do a weekly blog over at keeponcashflow.com/blog. And every week, and actually almost every couple of days, we're posting new stuff on YouTube at youtube.com/keeponcashflow. And you know that I like to get back in touch with you, answer your questions, and respond. And some of the things that have actually come up over the last couple of days, I was talking to, or in the last blog, one of the blogs, or the blog was, what is your personal financial statement? And some people have come back to me with direct messages, one or two comments. And I thought that I would clear it up because I got a lot more direct messages, and I don't know why, but don't be shy and send me direct messages when you can just ask in the comments. Like, that's the whole point. Ask in the comments, and then when I answer the question once, it's going to get answered for everybody. So, but anyway, because I want to make sure that at least I get things cleared up, because it sounds like I didn't actually explain it well enough. I thought I would come back here and just give you a real example and let you see exactly what I'm talking about. So, and the whole thing was, most of us, when we finish college, or when we're in college, you talk about, get the right grades and all that kind of stuff. And then afterwards, you will be asked over and over what college you went to, or which university, what your grades were, and all that kind of stuff. And I guess what I found is, since I've been out of college for over 20 some odd years with my 2 degrees and stuff like that, and been working in the corporate world, that no one seems to ask me about my grades or even what university I went to. Like, nobody cares. When I go out and I want to buy more rental properties or apartment buildings or mobile home parks, basically I'm asked the same question over and over. And they want to know about me, and they want to know about my company. But at the end of the day, they want to know what is my personal financial statement. They don't care whether I went to school in the Southwest of Ohio. They don't care that I was over 3 point, I don't even remember what it is, 3.4, 3.5, something like that, grade point average. They don't care. They want to know, like, really 4 basic things. And that is what the personal financial statement is. And that's really what I want to be able to go over with you, is what is your personal financial statement, and kind of what does that do? Basically, I love doing this stuff live at home because the kids are going crazy. But anyway, so the personal financial statement, what is it? And I want to give you just kind of like a really simple example, because I know I talk about this all the time when I'm paying Cashflow 101. But let me just leave this for you, and then I want to know if this works for you. If it works for you and it makes it crystal clear, do me a favor, like this, share this with others. Hopefully they'll understand exactly what the personal financial statement is. And at the end of the day, it's supposed to help you to get what it is that you need in terms of real estate or whatever you're going after. So let me just fire this up, and this should help. So I want to give you like a really clear example of what your personal financial statement is. And like I explained in the game, and you can also see, if you want to go into the video on YouTube, you can check it out there at youtube.com/keeponcashflow. Make sure you subscribe to the channel as well, because I'm going to be putting lots of new content up there multiple times a week. So anyway, what is your personal financial statement? Basically, it is made up of 4 different components. Let me kind of spell this out for you. The first is, well, it's kind of, when you're looking at, it's called like the income statement, or sometimes people will talk about your own personal P&L. These are the first 2 parts of it. And basically it is very similar to saying, like, if you look over a period of time, like every month, kind of how much money is left at the end of the month. Like, you get paid on the first of the month, and that's money coming into your account for a number of different ways. And then there's money going out of your account, and then it's what you have at the end of the month. And hopefully you have a lot left at the end of the month that you can actually use to invest in other things. So the first part is actually how much money is coming in. So you have your income, right? And your income could be made up in a number of different ways. You may have your salary that you have. After you have your salary, when you're investing in the right way, you probably have some dividends that are coming in. You may have some interest payments that are coming in. Or you may also be investing in things like real estate or businesses, right? But the point here is this is all the different means of income, the different streams of income that are showing up in your personal financial statement. And then afterwards, guess what? On one side, you have lots of income, and then you probably have expenses that you are paying every month. And that could be things like, well, you might have rent to pay. You might have taxes that you need to pay. You might have a credit card that you're paying off. You may have, you may also, if you're not renting, you may have a home loan that you have to pay off. You may have the children's school. If you are a big fan of credit cards, you might also have credit cards. But the idea here is like you have money coming in and then you have money going out. And that's all the stuff that you basically need to live every month. Like I said, rent, taxes, you may have credit card bills, you may have a home loan, whatever it is, the money that's going out that you're paying. And you're doing that over the period of, let's say, a month. Like, so at the first of the month, you're getting paid. If you're in Europe, definitely once a month. If you're in the States, it may be every week or every 2 weeks, but you have income that's coming in, and usually from your job, from a number of different things, and you have money that's going out. And that is the first part of your personal financial statement. You can think of this as your income statement, right? Very similar to what a big company has, right? So you have your income statement. And then the second part is also a part that I am a big fan of. And this is also of your personal financial statement. You have, let's see here, let me make this a little bit darker. There you go. Boom, boom, boom. And you have it set up on two different kind of sides. On one side, you have your assets. And on the other side, you have your liabilities. Actually, I'm going to write this below the line, but on the right-hand side, you also have something that's called retained earnings or shareholders or equity, right? Let's just leave it as equity, right? Because this is your personal financial statement. And on your assets, I love using Robert Kiyosaki's basically his definition of what are assets and liabilities. Think of assets or anything that puts money in your pocket, and liabilities are anything that is taking money out of your pocket, right? And so assets are pretty simple, and I'll put them like at the top. So if you have things like a savings account with money in it, euros, dollars, you may have some type of stocks or mutual funds. You may have some type of I don't know if you're into precious metals, you may have something like that. And once again, you may have businesses or real estate that you are investing in. Like, these are things that are actually putting money in your pocket. And that is typically, you're looking at that at a certain, if you're looking at the income statement, it's from the first of the month to the end of the month. Like, this personal part of your personal financial statement is really looking at it at a specific point in time, like, so a specific day of the month. And then liabilities, you may have things like a home mortgage, or you may have school loans that you're paying off. You may have a car loan. My handwriting's not all that great, so sorry about that. Credit cards, etc. And at the end of the day, you also have below on both sides, you may also be using some of the liabilities to invest in businesses or real estate. And so these liabilities are actually, you're using that money to generate, putting money into a business or real estate, and this could actually create more cash flow for you. So that's a good thing. And then at the end of the day, like I said before, you have equity, and that is really what's left over or what's being built up. And the idea is that the assets must be equal to the liabilities and the equity that are on the right-hand side. So that is called a balance sheet. And the reason it's called a balance sheet is because, well, the two sides must balance out. So So this is basically what we were talking about before. Like I said, you can check out the blog, or you can go to the YouTube video, but basically just wanted to go over what the personal financial statement is. And hopefully that makes it much clearer, concrete example. You can see things. And like I said, if this is something that is, hopefully this has been helpful. I want to get your comments, your feedback. If this was helpful, definitely share this out with other people. You can like the video, and most importantly, leave your comments. So I plan on doing this a lot more, and wanted to clear that up because it seemed like there was a little bit of confusion out there. But once again, the two parts of your personal financial statement, you have your income statement, which looks at things over a period of time. So like, let's say a month from the first to the end of the month, and then a snapshot or one specific day in time, you look at the assets, which put money in your pocket, and or the liabilities, which take money out of your pocket, plus the equity that you have building up. They must balance one another. And that is how you come to your personal financial statement. Hopefully this has been great for you. Like I said, leave your comments, and also share for those that you found this example useful, so you can share with others. Thanks so much. This is Billy Keels. It's my 2 cents for today. And as always, hasta la próxima.